Hello, another rather bullish week, so let's take a look at the market in more detail. Oil prices continued their rise on Monday, supported by ongoing Nigerian supply disruptions and a weak dollar following weak US jobs data. Front-month Brent gained just over $1 a barrel to close the session at $50.61 per barrel. Brent increased once again on Tuesday, although the gains were not as significant as those seen on Monday. Prices were pressured upwards as API figures suggested a larger than expected draw on stocks, and reports suggesting that China's crude imports in May hit their highest level in more than 6 years. Wednesday's session closed at $1.07 per barrel higher day on day, as the weekly EIA report showed US crude inventories decreased by 3.2 million barrels compared to the previous week. Brent softened throughout Thursday as traders took profits after recent gains. Despite the falls on Thursday, front-month Brent closed last night at $51.95 per barrel, and that's up $2.32 per barrel compared to last Friday. Prices were driven upwards throughout Monday's session as the system was heavily undersupplied thanks to a number of supply outages, both planned and unplanned. LNG send-outs increased, although it wasn't enough to bring the system into balance. A stronger euro against the pound and bullish oil prices also fueled the bull run. Most contracts closed between 1.2 and 2.15 pence higher per therm higher day on day. Prompt prices eased on Thursday as the system was well supplied. Near-term and longer-dated contracts were initially directed by the prompt's movements, although by the afternoon all curve contracts posted gains. Prompt and near-term contracts softened on Wednesday, directed by an oversupplied system. Norwegian production is expected to pick up from Thursday as the Kollsnes processing plant and Troll field return from planned maintenance. Longer-dated contracts closed the session flat, torn between bullish oil prices and a bearish prompt. Prompt prices continued to climb on Thursday as the system was undersupplied. Curve contracts, however, took their direction from falling oil prices. Last night, all contracts closed higher than last Friday. July 16 rose by 0.25 pence per therm and summer 17 by 1.6 pence per therm. Power prices tracked their gas counterparts higher on Monday despite forecasts of lower consumption due to warmer weather. Prices continued to rise into Tuesday's session. Wind generation fell and coal and CCGT generation picked up the difference. CCGT provided 52% to the mix. Nuclear, 22%, and 9% was provided by coal. Near-term contracts eased on Wednesday, whilst curve contracts closed relatively flat. Thursday's session saw near-term contracts soften in line with gas, and longer-dated contracts closed flat. Last night, all power contracts closed higher than last Friday. Thanks very much for watching. We'll see you next week, and you can download the full version of this report from our website.